Interglobe aviation falls more than 10% but recovers from the lows of the day slightly on the back of its second quarter numbers. The company reported its first loss in 7 quarters and higher maintenance and fuel costs take a toll.
ICICI Bank climbs 3% is among the top Nifty gainers on the back of second quarter numbers with beat estimates with industry-leading earnings.
Shares of Yes Bank and Bandhan Bank have also rallied more than 8% each following their results. Yes Bank reported a beat in profit after tax aided by another income, while Bandhan Bank's management tells CNBC-TV18 that they expect deposit growth to be faster than the advances going forward.
On the other hand, Coal India comes under pressure after the company's second quarter numbers miss estimates on weak realizations and higher costs.
And in confirmation of a CNBC-TV18 news break, ITD cementation promoters Italian Thai Development is set to sell 46.6% of its stake to Adani's Renew Exim. The stock has down more than 5%.
Hello and welcome to Chartbusters. I'm Nigel, with me is Hormuz, and as we speak, we've got a relief rally underway. We had mentioned this morning that don't rule out a dead cat bounce just because we have been oversold to a great extent in the near term. And we have seen a correction of close to around 8.5%, all of this in a matter of a month. So beyond a point, the selling pressure is likely to subside. And it appears, looking at the screen, that seems to be the case that's playing out here. Now, Hormuz, a couple of levels I'm looking at on the Nifty, 24,350. Going by the options data, that was the first level of resistance. The next resistance comes in at 24,550 odd. So let's see whether or not, we can get to those levels. But clearly, a good relief rally, and the Nifty Bank, that's the one that's leading the way.
It's a great start, at least for now. And you were mentioning this in the morning as well, right? That you were not very worried about the fall that you saw on Friday. And that's what's showing up on the index as of now. We're nearing those levels of 24,400 as we speak. The Nifty Bank leading the charge on the upside. Most of the index constituents surging in today's session after their results. Be it ICICI Bank, be it Bandhan Bank, be it Yes Bank. All of them are leading the charge on the Nifty Bank near the high point of the day. Now 650 points higher is the Nifty Bank. But the one stock that is under pressure today is Coal India, and that is on the back of its quarterly results, Nigel.
Well, 2 points why Coal India's missed estimates. One is because of the weak realizations and higher than estimated costs. Let's run our viewers through the numbers. On the sales volume number, we already have a cheat sheet out. Then the offtake has come in lower by close to around 3.5% odd. So that's coming at around 168 million tons. E-auction as a contribution of the total mix is at around 9%. That's holding steady. Now, on the top line, you had a decline of close to around 6.5%. Both factors played out. There was a volume degrowth and also realizations were weak. And on the realization parameter, particularly the FSA per ton, that was a negative surprise. It contracted by close to around 5.2% odd. On the e-auction, well, yes, there was a contraction of 13%, though on a sequential basis, there was a mild uptake of around 2.5%. The FSA mix can be attributed to a weaker sales mix, and that could be one of the reasons that played out there. The operating profit as well was down by close to around 14%. Margins came in at around 28% odd. Because as these realizations were lower, they didn't get the benefit of operating leverage, and a couple of costs were higher in spite of selling a lower amount of volumes. So you had the contractual expenditure was up, you had the other expenditure as well that was up by close to 100%, and the net profit came in down by close to 2%. What saves them the blushes is that they have declared an interim dividend of around 15 rupees 75 paise. So that's why the stock, I think, has bounced off a little bit from the low point of the day. That's about Coal India, but let's talk about Vare Energies. It made a very, very strong debut today, listing at a premium of 60% to its issue price. We have with us Mr. Amit, who is the CEO, as well as Ms. Sonal Srivastava, who is the CFO of the company. Good morning, ladies and gentlemen, and congratulations first to you, your entire team. It's been a long journey. You all have been pursuing this, and your shareholders would be quite happy looking at the screen today. But as promised in the, at the time when the IPO opened up, on listing, we are going to try to push you a little bit for numbers. So let's get straight to that. Now, the market capitalization on listing is close to around 68,000 crores. And if I look at it on your EBITDA parameter, you're going at a run rate of around 550 crores. You're talking about backward integration as well. So let's get that number out of the way. What can margins scale to, given that backward integration is coming on stream? Currently, you're doing around 16%. For FY25, FY26, where does this number head to?
So great. Thank you very much for having us. Yes, great listing. Thank you very much to all the investors who have reposed their faith on us. We will, as you rightly said, Nigel, we have backward integration in our plans, and the backward integration gives the fillip number one to margins as well as of course to the supply chain resiliency. So in terms of numbers, I would say we are looking at easily around 200 to 300 basis points, but I'll give it to Sonal to comment on the numbers a little bit.
Sonal, please take it away.
As I said last time, yes, Nigel, like I mentioned last time, we have been growing our margins and now we stand at 15% thereof. In the next 2 years, of course, we see it evolve at a higher level. It's difficult for me to, give you a number. I'm in silent period also now, Nigel. But more you will hear from us on this. But clearly, I think whatever capital we put out there, the return on capital and which margins drive that, that focus will continue.
All right, let's try to press you a little bit more on this. And in the silent period, Sonal, and going by regulations as well, we don't want to know anything in the near term. But we'd want to know with that backward integration, I think Amit briefly mentioned that maybe it could be 200 basis points odd.
Yeah.
Given that scenario, should we be in the vicinity of closer around 18% margins, say in the next 2 years, 18 to 20%? Should we be working with that? Because volumes will pick up. That will be operating leverage will play out as well, and backward integration as well. So given the levers in place, should 18% plus margins be achievable for FY26?
So let's like Sonal said, Nigel, we are in the blackout period. Far out into the future, the margin territories will look very, very solid, both from the perspective of backward integration as well as the demand. Demand is extremely robust. The policy framework is definitely helping. So all of that taken together, we are looking at robust margins going forward. And in the territories that you mentioned, that could potentially be ballpark numbers that we could look at.
Amit, Sonal, good morning. Thank you so much for joining in. Congratulations on a very solid listing on the street. And since you mentioned robust demand, Amit, what's the ordering activity been on ground? And if you could tell us, what is your order win rate in the tenders that you are currently participating in and that you look to participate in the future as well?
A great question. So demand is extremely robust in the two market segments that we operate in. Two important market segments for us are India and the United States. Demand is robust on both sides. We talked about 16.67 gigawatts of order book. It keeps growing as we keep sitting here right now. And the mix is also very robust, where there is a fair bit of orders, export orders, and a fair bit of orders within India as well. So the mix is good, and the demand continues to be robust. There are several schemes, PM Surya Ghar Yojana, which helps us out, PM Kusum scheme, which helps us out. As far as India is concerned, in the United States, having a manufacturing facility is a big plus, because then we are able to cater to the domestic content requirements of the United States. So overall, a very, very strong situation to be in.
Okay, all right. What about the competitive intensity? Imports as well have coming in there. You have larger players that are competing in this space as well. Do you think the pie is big enough, everyone can nibble, and that import substitution will be good enough for everyone to prosper? Your take on the industry?
Excellent question. As you rightly said, there is competition, and competition is actually coming in because there is a huge demand. And you nailed it right when you said, is the pie big enough? Definitely the pie is at this point in time fairly big. India itself, we are looking at 500 gigawatts of renewable energy that we need to get to by 2030. And that does not include the increased requirement that is going to come out of data centers, that is going to come out of hydrogen. And so if you plug that in, it is conservatively at least 100 gigawatts above that. And that translates to a very, very robust year-on-year demand on solar. Therefore, at this point in time, a fairly good size pie for everybody to, well, I would say not exactly nibble. We would like to have larger pieces of the pie as well. But yeah, it's a good situation again to be in from a demand perspective. and competition and demand supply situation.
All right, Amit, the final question before we let you go. And, this is again directionally, either Sonal or you could take it. But, I'm looking at your EBITDA trend. Almost every year it doubles. Last year, I think it was around 1,500 crores. This year, you're already doing 550 crores in the first quarter. Do we expect the EBITDA number, say, by FY26 to be closer to that vicinity of, say, around 4,500 to 5,000 crores? Is that a possibility? Because you're already running a run rate of close to around 2,500 crores for this year itself, which could be even be better. So should we work with a number north of 4,000 crores?
So we will let you work on the numbers, Nigel. But what I want to bring on table is that, our US operation is going to go live. The backward expansion of the cell will come in place very quickly, and that helps costs. The PLI-related expansion, the module will come in early, so we will see some benefits in 26 as well. So from here, when I'm looking at my capacity, which currently is 13.3, this is going to go up to, around 15 and a little bit more than that. So yes, we can look at some expansion, some good expansion on the EBITDA level as well.
All right, Amit, Sonal, many congratulations on your listing and thank you for joining in today. Wish you good luck for the rest of the year as well. Looking forward to chatting with you more on this forum. Take a short break. The management of Texmaco Rail joins us on the other side. Welcome back. On to the big CNBC-TV18 exclusive. Then the RBI Governor Shaktikanta Das has been ranked as the top central bank governor by US-based Global Finance magazine. My colleague Malvika Jain met with him in Washington, D.C., where he spoke about the actions taken against NBFCs in the recent past and said that he believed there were no systemic risks with respect to business restrictions imposed on lenders. Listen in.
No, there is no systemic risk. In fact, I would like to emphasize that at the moment, at the system level, the banking sector and the NBFC sector, at the system level, they remain very robust. The various parameters, the regulatory parameters, the various financial indicators of both banking and NBFC sector, they continue to be very strong. So at the systemic level, there is no problem. But where we saw the problem was in the microfinance sector. You see, in 2022, we came out with new guidelines relating to microfinance lending. Earlier, the principle was that cost of funds, the interest rate was supposed to be the cost of funds plus 12% margin, which the MFI, the microfinance lenders were allowed to charge as interest rates. We deregulated that in 2022 because this 12% margin was becoming kind of a benchmark for everyone.
Sure.
We deregulated that and we expected that competition will result in optimization of the interest rates for the benefit of the borrowers. And who are the microfinance borrowers? They're basically the small borrowers, people who do not have, who are not economically very well off. So therefore, we did that deregulation on the expectation that competition will lead to better, lead to reasonable interest rates for the clientele. Now, unfortunately, that has not happened. We have been constantly voicing, the Reserve Bank, myself, my colleagues, on a number of occasions, we have been voicing our concern. In fact, even in the last monetary policy statement, I have also mentioned that. Now, what happened is that what happened was that in our on-site and off-site supervision, we found a number of NBFCs charging exorbitant interest rates.
Right.
Interest rates going up to 40%, going up to 45%. Now, and who is the borrower? The borrower is he is a man of small means.
Right.
And these are not well-off sections of society. And a 40-45% interest rate or even 25%
is a lot.
I don't want your viewers to assume that if I say 35 is the tolerable limit. I'm just using it by way of a random example. Now, such excessive interest rates are usurious. And apart from that, some of the charges Like, for example, a few days of delay in repayment, the penalties are exorbitant, and sometimes the penalties are not, adequately transparent. So, therefore, whatever measure we have taken, it's in the best interest of the customer. We found certain outliers, and even in these outlier, cases where we have taken action, we have been in bilateral engagement with each of them for last several months. Now, when we see that appropriate corrective action is not taken, we engage first. And when we see after several months of engagement that corrective action is not being taken to our satisfaction, then we have to act and protect the interest of the consumers, of the customers.
Sure. And then banks have been reporting increased stress in unsecured retail loans. The RBI has raised risk weights in this segment last year as a warning. Does this remain a concern for you?
No, I think after we introduced those additional risk weights, etc., in November last year, the segments where we imposed these additional we impose certain additional regulatory compliance requirements, the provisioning requirements. In those sectors, we have seen moderation in credit growth. So that has happened. There are, with regard to other sectors, we are closely monitoring every aspect of the credit market, every subsector of the credit market. We are monitoring. As and when something is required, we will act and we will take preemptive action before the problems start building up.
RBI's draft proposal on liquidity convergence norms has been in the public domain for a while. Banks have expressed concerns about the potential impact on capital and by extension on credit growth. Is there a possibility of some kind of softening of your stance on this issue?
We have adopted in the formulation of regulations, we have adopted a very consultative approach. And that is the purpose of putting this discussion paper, to get comments of the stakeholders, to take that into consideration, examine that, and then come out with our guidelines. We have received a number of suggestions.
Well, and you can hear views from the RBI governor on moderating inflation, but the risk around it on the domestic economy doing well, and the positives significantly outweighing the negatives when it comes to the festive season demand. Catch excerpts from the exclusive interview all day today on CNBC-TV18. Well, Texmaco Rail delivered a strong set of numbers in the second quarter, reflecting good growth. We have with us Mr. Mukherjee, who is the executive director and the vice chairman at the company, who joins us on the show. Hi, sir. Morning, and good to see you, Ben. First half of the year has been very, very strong. You have grown by more than 60%, which is a cracker. Though you have been guiding that, I think for the year you'll grow by close to around 30%. For this year, what kind of a revenue growth should we be looking at? You could give us a sense about execution, how things have been ramping up. And also, have the supply side issues got sorted out?
Yeah, good morning. And let me start by saying that we had an action-packed quarter. And we have been walking the talk, because this is what we have been telling everyone, that this is what we'll do. So I'm happy to say that we are walking the talk, but there's a lot to do. Now, now, as you know, that we had a few very significant events in the last quarter. And one of them is that we went ahead and acquired a large wagon manufacturing company in West. That's the company which used to be known as Jindal Rail Industries Limited. So we renamed it as Texmaco West. So with the view that we are a pan-India company, and also we have a desire for global pursuit. So I think I'll come to that later. But put together, our own standalone operations have been strong. We sorted out most of the supply chain issues. We are working very strongly on the cost reduction. So you would find that we had growth of very close to about 35% in our standalone operations on a sequential basis. And if you look at the half yearly, we had a growth of 33%. But I would like to more talk about the consolidated growth, which had been in the range of 64%. And of course, the EBITDA margin had gone up from...
Mr. Mukherjee, Mukherjee, we have highlights of the past quarter. Give us two numbers. One, What is the revenue growth we should be working for this year? As you said, 65% is the growth in the first half. For the year, what should it look like? And margins, since you have levers in place, what should the margin number look like?
The revenue growth, we would be expecting to grow. We can't have such phenomenal growth going on every quarter. So I would expect that we would be growing at maybe 2-3 times of the 2 times the GDP kind of a number. Giving margin, I think giving a specific margin, I don't think is going to be prudent for us to do that for reasons you know. But we are constantly endeavoring to improve the margin. So the message that I can give you that we are expecting an improvement of margin by another at least a substantially 15-20% from where we are today.
Mr. Mukherjee, good morning. Mr. Mukherjee, you mentioned the margins will improve by around 15 to 20% from where they currently are. So if you're assuming that your margins are currently at around 10% for the first 2 quarters of the year, do you see that? Would it be fair to assume that you will go up to say another 11 or 12% by the end of the year?
As I said, that it's very sensitive to talk about the margin for reasons very known to you. But I can only say that we would be improving our margin.
Okay, you briefly spoke about that asset you all bought, right? Jindal Rail Infra, and you'll have renamed it as well. I think you've acquired it for around 615 crores. What is the revenue potential as of now? And where do you see this asset scale up, say in the coming years? Because as you said, it has tremendous potential.
It's a tremendous potential, and it actually falls straight into our strategic thoughts. Before the number, I would like to very clearly tell you that the pursuit is to go for global excellence and global player in the field of freight cars as well as freight car components. And this I have been talking, and that's why I said this is a move towards walking our talk. Now, the numbers in Jindal, in Texmaco West, we do most of the productions are non-Indian railway wagons, and they are the specialized wagons. We have specialized competencies, and one of the very few in the country to have that. And we have also acquired a very strong design development group along with this. So we are trying to build it up. We are having tie-ups with the global majors from the US, as well as you know, that we have a joint venture with a company from Czechoslovakia, which is a very well-known, prominent European manufacturer. The company is Nimwag. So we are trying to access that with our global competencies. Right. And what we see is that, and with that keeping in mind, we are building up a global capability center. So
right.
I'm sorry if I have digressed from your question, but this is something which I wanted to tell you.
Yes.
The numbers, yes, that also is going to grow at the similar number because the order book is getting very, very encouraging.
Right. All right, Mr. Mukherjee, we leave it at that. Thank you so much for joining in. Wish you good luck for the second half of the financial year as well. Time for a short break. More on the markets on the other side.
Well, the markets are holding well. We're holding at around the 24,400 odd mark. The bulls will be feeling good after a couple of hours of trading session. But as we always say, it's not about the start, but where we end later today. For the time being, things looking good. All the key indices trading well in the green. We'll wrap up on this edition of Chartbusters, but you don't go anywhere. Trading Hour comes up next.